Back to the charts with Big Boss Crypto, bringing you another market update on Bitcoin and short-term day trading. Last time we discussed what formation we had going on, and we had a double bottom formation and the first leg up. And I said to you, they always follow the same principle, which is a retrace down and then the third and final leg up, which happened right here. And then they formed a double top formation and you had a huge drop down where we are currently. So what happens next, you might ask, and where do we have our liquidation points? Well, I'm glad you asked. Let's find out. Okay, so first and foremost I want to point out that we need to repeat what kind of structure the market makers use every time on every time frame. And that is this structure. A drop down, double bottom, and then they shift out the price upwards. In this case, retrace, second leg up, retrace, and then the third and final leg up. And that's where they form the local top, which is always in a M formation of some kind. And that's where they reverse the price. First leg down, second leg down, and then the third and final leg down. And that's where they repeat the cycle and shift up the price again. Okay, you can use this on every time frame, and the market maker use this always on every time frame, and it's basically human psychology. The second thing we have to keep in mind is where the volume resides. Where are the big candles that shows an imbalance in the chart? And in this case we can see that we had a huge red candle here, and it's with volume, high volume. I use the PVSR here indicator. I recommend that you use it. It's totally free. Everything I use is totally free. Even the trading view here is free. You don't need to pay a lot to trade. Okay, so we can point out that this candle has a lot of volume to it. A lot of sell orders are here. So it shows that there's an imbalance, and the imbalance will be filled at some point in time. Okay, so let's mark it off in the chart. This whole candle. And I want to mark it off green, since there's a long opportunity here. When it's a short opportunity, that's when I show it as red. Okay, do we have some other points here? Well, let's see. Just look at PVSR, where are the candles residing? Okay, we have on green here, but it's been recovered by the upcoming two candles, so we can't use this one. It's been recovered, the orders have been filled. Okay, this here looks interesting. It's a green candle, two green candles. The first one here has been recovered, and that's where we are currently sitting. But the previous candle is showing an imbalance, and it has not been recovered yet. So that's where we might want to take some profits on some shorts, in my opinion. Okay, so we know where the latest liquidity is. Okay, let's look at Kingfisher and the liquidity points. How is it looking? How many people have been going long or short? It's updated, so don't worry about that. Okay, interesting. We see that we have a lot more liquidity to the downside. So people have been going long, and they might get liquidated at from 19.8 up until the current price. There's a lot of liquidity for the market maker to grab. You see 31 million, 20 million. There's billions of dollars here that the market maker might grab, and probably will grab, because he wants to be profitable. And he makes money off people losing money. So get that in your head. Okay, we see that we have also some liquidity to the upside. From the current price to, I would say, 20.6. All the way up to 22,400. Okay, we have to keep this in mind as well. So we know where the liquidity is. And we see also that the volume candle is at 22.4 from 21.5 to 22.4, which coincides with the liquidation points in this area. So I would guess, following the same structure we have from the market maker, we will see a retrace of some kind. It could, to invalidate this structure, it needs to go above 22.5. But there will be some kind of retrace in the near term, in the next coming days. And that's where the market maker will reverse price, going down for the second leg down and grabbing the imbalance in the chart. And then a little retrace and the third and final wave down, which we don't have to worry about now. That will come later. So what we need to figure out is, do we go long or do we go short? Well, it's a tough question. We can see that we are in some kind of range, in a consolidation. And we also had news today. The CPI numbers came out as expected from Britain, and also from the US the PPI numbers came out as expected. So the market has been quite slow today, which makes me believe that they want to see shorts coming in, which they can then liquidate and then reverse price down even lower. That is something that I'm looking at. Remember, none of this is financial advice. You do whatever you want to do. This is all for educational and entertaining purposes. But okay, we see imbalances in the charts and we see also a structure which is forming. So let's see if we can draw some conclusions from this. Okay, so let's draw some conclusions from today. The PPI came out as expected today, so the price is still in a range. The market makers are still indecisive and they will move price tonight or tomorrow or the coming days. We will see, but we have to be careful and follow the price carefully. We also saw that we had imbalances to the upside for the market maker to take, but we also had some liquidity zones and imbalances to the downside with the end zone at 19.4k as I showed you. But the question is, when will we get there and how big will the retrace be? Or have we done a retrace, which is our consolidation range? Well, that's up to you to find out. Big Boss out. Peace.